This episode of Beyond the Closing is brought to you by First United Land Transfer.
Hello everyone, I'm Victor Simmerall. Today I have a guest, a real estate investor, good friend of mine. His real estate portfolio is across several states, hundreds of millions of dollars. A Serbian immigrant that came to this country when he was a teenager, an exchange student, went to Easton High School, graduate of Lehigh University. Borko Milosev, welcome. Thanks for coming in and thanks for doing this.
Thanks for having me.
So tell me, Borko, when you came to this country, what year was it? How did you get here?
Sure. I came in 1999.
Okay.
I was senior in high school. I always wanted to come to America, even though I've never been before. So there was just this urge to search for a better life, and I convinced my parents to send me abroad to study as an exchange student in senior year in high school, and ended up with a family in Easton. And from there, actually went to Moravian.
Forgive me. Okay.
Other side of the river. That's what brought me to Lehigh Valley.
Okay. I remember we were talking before. When you were in college, you bought your first real estate, your first property. It was on Hanover Avenue in Allentown.
Yeah. So during my years at Moravian College, as every student, or most, I should say, I needed to earn some money. So I, in addition to working at school, I worked for a caterer, and it was interesting that our caterer got me into real estate business. But the gentleman that I work with was investing in real estate on the side, and he noticed that I was taking interest in him telling me about it. So he ended up giving me some books about real estate. He gave me at that time CDs, sort of those CDs that were sold, course that was sold on infomercials back in the day. And then also he would take me along with him as he needed some, manual work or labor work in his apartment unit. So I did the clean outs and painting and things like that. So that was the initial interest and kind of exposure to real estate as a college student. And then between junior and senior year, one of Moravian alums, a guy by the name of Rob Verone, gave me an internship in New York City to work for him. At that time, Wachovia Bank, we did commercial mortgage-backed securities. So we were financing large real estate transactions, and that's where I really got the bug for doing it. I got exposed to some very interesting people, and once I got back from that internship, I started looking for real estate and found the first home, and then a second, and things like that. So.
When you started to buy real estate, what were your earlier projects?
Yeah, so I started the easiest entry point for anybody is a residential, and then particularly single family home. I think just, at least to me, residential is sort of intuitive, right? We all live somewhere and kind of understand the concept of an apartment or a house. Mm-hmm. And then a single family home versus multifamily was just cheaper and smaller for me to do. So, and I think still today the program says is to buy a first property as a owner occupied and get 97.5% mortgage, and that's how I did it. So I essentially bought it with very little to no money down. I did have somebody who helped me co-sign for it. But that's why I chose to get into residential.
You're talking about your first property?
My first property, yeah.
And you were still in school at the time?
I was still in school. I bought a first one. I bought it at distress. It was an REO property in a really bad shape. I remember taking pictures and videos and sending it to my mother, who then called me crying, thinking I've lost my mind. But me and some friends fixed the things in the house that we could, and then I hired professionals for things I couldn't. And we created enough of a value where, and that's been more or less my strategy ever since, where we could go to a lender, we could go to a bank, refinance the old loan, and take out money that we invested. And so I had the capital back to buy a next property and then a third one and so forth. So I was buying residential single-family homes through 2005 when I bought my first multifamily in Bethlehem, a 16-unit multifamily. At that time, I was back in New York working for Wachovia. Got a job after the internship. And my first partner was one of my managing directors, and who put up most of the money. And I did the work, again, created value by renovating, improving the property, consequently raising rents and therefore value, and again, refinancing it, pulling money out and kind of doing it again. And to be honest, pretty much that's been my strategy ever since. For the last 20 years, I kind of do very similar, take a very similar approach to real estate.
So you've always lived in Lehigh County since you're here, in Northampton County and Lehigh County?
Yeah, other than after I graduated, I got a job in New York City. So I lived and worked there for about 9 years. But while I was in New York, any free nights and weekends, which frankly wasn't much, we worked really, really hard, probably 60 to 80 hours a week, I would work on my real estate on the side. So, things were slow at the beginning. I might have had, I had that 16-unit property in 2015. I had a couple single family homes. And then quite frankly, in 2006 and 7, we ended up not buying a lot. And it was, I want to believe, a combination of us being disciplined and not being able to find opportunities, which, and then being busy with the other work. And then market collapsed in 2008. We had a financial crisis. Real estate is very much a leverage play for most people. And so having available financing is important. And when the financial crisis happened and banks kind of pulled back, there was not really a lot of opportunities to finance and therefore buy properties. So we didn't restart buying until I believe it was towards the end of 2009, 2010. When I started buying some larger multifamily properties, all in Lehigh Valley. And the pivotal moment was in 2011. We bought 108 units in east section of Allentown. It was a bankruptcy sale. We bought a property from New York Community Bank. And what happened is once we acquired this 100+ unit property, I was able to hire a full-time staff, and that's when post-road management was formalized. And that's when I started to think, hey, look, this looks like it might actually have a life of its own. Maybe it's time for me to quit New York and do this full-time.
Okay.
And then I came back.
So I always try to figure out what drives you. Some of your other interests, mountain climbing.
Sure.
Obviously, you're not. You don't have any missions that you're going to go on that you've been talking about, but you've ascended some of the tallest peaks in the world.
Yes. I like to push myself, and I constantly feel like I am. So if it's not work, or in addition to work, I found I have these extracurricular activities. For a while, I was doing triathlons. So I ran a couple Ironmans, which are 13, 14-hour endurance races. Then when I got bored with that, I was doing some long distance bike riding. Friend and I did a bike ride from San Francisco to LA, and then rode from Geneva, Switzerland to Nice, France, through French Alps, and kind of part of the Tour de France route, which are all kind of a grueling things. And then I fell in love, incidentally, with hiking and mountaineering, and ended up, got on a 7 summit path. It's the tallest mountain on each continent, and I've done 5 of them. I was 5 out of 7. I was training for the 6th when COVID happened. And so, and again, given that this is all different continents, I wasn't able to travel. So I put a pause to that, but we might resume it. Actually, I'm talking to a friend to potentially go next Christmas, New Year's Eve, to go to Antarctica and try to do the 6th.
I know physical fitness is a big part of your life, and you're also accomplished in jiu-jitsu.
Well, yes. So when the COVID happened and I couldn't travel, and while I was hiking, I was listening to a lot of podcasts, and some of the people that I was listening to were jiu-jitsu practitioners. So I ended up trying it out and very much enjoy it. Find it not only physical but also mentally stimulating. I equate it to a physical chess game, if you will, and truly not only strength is important, but knowing the moves and having strategy tactics plays a role as well. So I enjoy that aspect as well. So yeah, I've been kind of playing with that in the last couple of years.
Yeah, one of the things I admire about you the most is you're a family man. You have a wonderful family.
Thank you.
Two beautiful daughters, a lovely wife, and tell us a little bit about them and the amount of time that you spend. You really make your family the priority, and that's so important.
Yeah, thank you. So, I think one of the silver lining, at least for me, for COVID, if there's any, was that we ended up working from home, and that's the time when I started a family. I would say a little later than maybe what other people, which has its goods and bad, right? The good is that you have a business, I have a staff, and I'm able to make my hours more so now than I would have maybe 10 years ago. So that's one aspect. The other one, as I was alluding to, is COVID and working from home. And I was starting to work from home just as we had our first child. So A, business was down, and B, just being home, working from home, you're able to have a breakfast and lunch and dinner with your family. So that's been really nice. And I also, I'm one of those people that believe that there is in different times in your life, you should prioritize your life differently. And I hear and read a lot how fleeting these moments are with your children, right? How soon enough, right? Even as soon as they become teenagers, right? They might not want to hang out with me as much. And then once they are done with high school, and if they decide to go to college, right, likely may move away, and so I'm trying to really take an advantage of that, and I'm grateful that I'm able to spend more time with them now. So
one of the other things, your interest is your affinity for aviation. You're an accomplished pilot.
Thanks to you.
Well, I think thanks probably to some of our friends, mutual friends, and but you own 2 planes, and that you use for your business.
Yes.
And you have real estate holdings in multiple states. If I understand that, one time your portfolio was over 14,000 residential units across multiple states.
Yes.
When did your portfolio start to really grow, and what took you into other states?
So we're very opportunistic type of buyer. There's some buyers that focus on specific geographic areas and only kind of stay there. We are more of a opportunistic, so we'll look at elsewhere. Now, it is extremely difficult to look at every market, and certainly can be an expert on it. So the way we grew into the other markets was first portfolio acquisition was in 2016. We were presented an opportunity to buy a portfolio with a New York City family of about 5,500 units in 5 states. And so it was a distressed opportunity. Lender was taking it back, and we liked the basis. We liked various things about it. So that's how we ended up. So my expansion and the second portfolio as well, it was some overlap in terms of states, but that portfolio was in 10 different states. So we ended up owning, I believe it was 13 or 14 different states, and as you said, about 14,000 apartment units. Again, all of them were kind of opportunistic. So if something like that is presented to us, we'll certainly look at it. But I won't travel to other states where we don't have presence and look at sort of random one-off projects. It'd be very difficult for us to understand and know the market, and would also be difficult to manage it without presence there already.
Is there a formula that you use to assess a property to see if there's value, and is there a certain time period that you'll keep the holding?
Yeah,
and like creating the value, improving it, and then at the right time sell it? Is there any type of formula that you use?
Yeah, that's a good question, or questions. There is. We have sort of our cash flow model. So whenever we look at the real estate, we look at historical performance by the seller or current owner, and then we'll from there look at things that we think we can do better, right? And sometimes it's it could be multitude of things. It could be owner that has owned it for a long period of time. They've sort of made their money, if you will. They don't want to rock the boat. They want to keep the place full. But so the rents might be depressed, right? We might be able to increase rental rates, either just, again, because they are managing for occupancy versus for increasing revenues, or because maybe the units are older, right, and could benefit from upgrades to kitchens and baths and things like that. So that would be one aspect. Another is there might be, we're if all goes well, sign a contract to buy something, an asset that's owned by a public REIT out of Canada. They, as an institutional owner, operate very different than we would, and we feel that they are overstaffed significantly. So we see some abilities to cut expenses. There's that payroll I mentioned. There's also energy efficiency programs for water and sewer, for electric, negotiate different contracts and things like that. So we'll again look at revenues and expenses and see, is there something that we think we can do better than the prior owner or different that will improve the kind of the bottom line. And then based on that, we'll do what people call a sort of a eternal rate of return, and there is a certain target that we target. So if it hits that target, we would have an interest. And then in terms of a hold period, we generally don't. As mentioned, we're opportunistic, so when the time is right, we will sell. If the time is not right, we won't. On average, I would say about 5 years, 4 or 5 years has been on average our hold period. I also will tell you that might change as I age, just being frank. Right now I'm young and don't mind working hard. I mean, what we do is a lot of work, especially if you're buying, selling, right? Constant transactions. So it's a lot of effort, and then redeploying that capital into new opportunities. I foresee that maybe later in life, you might want to step back a bit and in that case be more of a passive than we are today, but that's probably down the road.
I think one of the questions that probably a lot of people would want to know is, what do you see in the next year or the next 5 years? What are your thoughts? Are we in a holding pattern, or is there opportunity for growth, or do you see a pullback in values?
So it's a good question, one that I think about a lot lately, and my opinions are changing, maybe not daily, but weekly. 2 weeks ago, if you've asked me the same question, I would tell you that I felt we were in a hold period, wait and see. There was this expectation that with Fed raising interest rates, that the economy is going to crash, that we're going to have a recession, and one way for Fed to fight the recession is by cutting rates. So the idea was, let's just wait. Once that happens, rates are going to drop, therefore cap rates are going to drop, and values are going to go back to. There has been correction in real estate. Let me just preference everything with that. Values are off. Offices as much as 50%, especially in some markets. I recently read an article that said that maybe 1 or 2 buildings in the city of Chicago are not underwater, right? They claim that all other buildings are underwater. In a residential or in a multifamily apartments, probably, again, depending on the market, but you have had the retraction, prices arguably by 20%. So the idea was wait, and see what happens. Over the last 2 weeks or so, I'm reading more and more that odds of recession are shrinking. There is a possibility that we do have a soft landing, what the Fed has been talking about. And if that happens, and inflation gets tamed, there's, in my opinion, there's no incentive for Fed to cut rates. So we could be in an environment where we have higher levels of interest rate for foreseeable future. And it was hard pill to swallow for me once I started realizing that's not a possibility. But to be honest, on the other hand, I kind of already adjusted our thinking, and I'm just operating under these new kind of parameters that we could be in a higher interest rate environment. Maybe the buildings that I have owned that I thought were X are worth now X minus 10 or 15%, but so be it, right? That's kind of life. You roll with the punches, and maybe you don't make as much money, or maybe you don't make money, but you move on, right? There are other buildings to buy, and kind of will continue to turn capital, invest capital.
Borko, I can't thank you enough for coming in here and taking time and talking about your accomplishments. Is there anything you'd like to add before we sign off?
No, we think covered everything. Thank you for having me. Always a pleasure.
I always enjoy our conversation. I enjoy watching you and watching your success too.
Thank you. Very kind of you. Thanks for having me.
Thanks everybody for joining us on this episode of Beyond the Closing. We'll see you next time.